Hello, everyone, and welcome to, for us, it's the third sort of webinar that we've done today. Those of you who, if you obviously in your email, what we've done is we've split each session into half. It makes it a lot easier to watch the recordings. We found the long webinars, just, people don't have time, quite frankly. So that's why there are four. So there are two Forex and two for a stock trading, and also looking at with day trading actually, but we look at stocks and we look at indices. I know some of you are coming to all four, which is fantastic. Others are just joining us for this particular segment, so lovely to have you here, and thank you so much for taking the time to come and join us. David and I are thrilled to have you and thrilled to be here as well. But before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. Please don't ever think of using money that you cannot afford to lose. And as always, we're going to be looking at charts, clearly, trying to establish what is going on also in the broader financial universe, as it were. But from the chart perspective, we are going to be looking at stocks. I think David's got some indices as well. I don't think we're doing commodities today. And the methodology that we use, most of you know that who come along, but in case you don't, it is called volume price analysis, and it's using that very special relationship between the price action and the volume. But a VPA is more than that. It's those are obviously two key important elements of volume price analysis, but it is also support and resistance. Absolutely crucial. I cannot stress it enough, and I'm going to show you that in some of the charts that we have. We've got candles and candle patterns, and I'm going to have a look at a particular candle formation today that I just want to highlight and give you, perhaps some thoughts that maybe you can take away and look at your own charts, and also look at some historic charts as well. And I've got some examples of that as well. To help with VPA, there are companion books to the main book, which is this one, the complete guide. And there's also a Forex version, and that is essentially worked examples, because the beauty about this this methodology is that these patterns and cycles repeat over and over and over in all time frames. And once you begin to recognize, once you begin to spot those particular setups, those anomalies, and put them together with, as I said, the all-important support and resistance, those candle patterns, those candle configurations, not just candle patterns, but I call candle configurations. You just see that again and again and again. And what that does for you as a trader, it basically takes away your stress and your fear, because there's one thing that kills successful, the chances of success in this business is really fear. And if you think about it, when it's either fear of actually putting on a trade, or when you're in a trade, it's fear that, you see your profit drain away. But with VPA, though, we can help. It will help take away as much, I wouldn't say uncertainty, it won't give you certainty, because we live in an uncertain world, and trading is by very definition an extremely uncertain I wouldn't say profession, activity, as it were. But what it does, it will calm that part of the brain that that is triggered. As I said, first of all, oh my God, is it time to get in? Is it time to get in? Oh no, I don't know, because there's volatility, there's momentum, and more importantly, is when you're in a trade, it will help you stay in, because it helps recognize when you see a pullback, is it just that, a pullback, or is it the start of a particular reversal? Which also leads us to the question of, when there is a trend, when do you rejoin it? Maybe you've missed part of that move. What do you look for? This is what VPA will give you. Those pointers, it will point to, it will tell you, go and look at this. And once you understand that, that will then help you. And as I said, because these repeat, you know, practice makes perfect. Looking at charts, you know, highlighting charts. That's what it, anyway, that's what the examples book is there for. We've also developed some very special indicators to support the methodology. You can find those details at quantumtrading.com. But as I said, much better to look at what the chart is actually telling us. Right, now, what I was going to look at today, those of you who were with us last week is when we started. We were looking at sectors. As you know, I'm kind of a bit obsessed with sectors. I did it all last year, but I can't stress how important they are. And what we've ended up with, the sector performance for 2021, and this is from Novell or novelinvestor.com, great little free site. What we see is the energy sector, which at the end of 2020 was bottom of the class, whereas by 2021 was, you know, had actually was the top performing sector. So that got me thinking of, well, okay, so how can we use that? So is this, what's going to happen to energy? And it goes back to this continuation of trend, because energy sector is in trend. I've got the XLE, which is the ETF for the sector. Is it going to carry on higher? Or the fact that it is, you know, it put on such a fantastic performance last year, is it going to reverse? Now, market conditions out there at the moment that are very supportive of the energy sector. First of all, inflation is good for commodities. Commodities tend to rise, especially oil prices, and the oil prices is going up. So maybe this is going to be one where, you know, we can see here, energy was, you can see the number of years that it was at the bottom of this performance table. Is it going to be a repeat performance, say, for 20? We don't know, but it's one way of looking at sectors and then drilling down into those sectors to go and maybe find a stock that maybe hasn't, you know, didn't do too much last year, but maybe this is its time to shine if the sector is going to carry on high. So that's why I'm going to focus on energy, on the energy sector. And when I started to dig into it, I came across some really incredible charts and some amazing sort of information which I would like to share with you today. Now, if you've got any questions, please just put them into the chat box and we will answer them, either in what I say or what you see on the chart or anything about the quantum trading indicators, or obviously about VPA. We'll be more than happy to answer them for you. Just before I do that, let me just have a quick look, see what's happening at the markets generally. You know, it was sometimes you know, it was a pretty dramatic day yesterday, as we can see here. This is the Nasdaq, big fall, and now it looks like it's coming back quite nice. It's having a bit of a rally, but the rallies that we've seen for the Nasdaq in particular, certainly over the last, well, certainly since this was such a deep hammer candle with such a huge amount of volume. But given the extent, I think David said, was it last week or yes, it was last week. He said, yeah, it still looks a bit weak. They kind of peter out, the rallies, and if you look at the candles, the subsequent candles that followed that hammer, you had you know, a fairly big candle with a wick to the bottom, but okay, reasonable volume. But it's this candle here, very compressed, with as much volume as the previous candle. Well, that in itself is what we call an anomaly, and this is what I'm saying. So this is what VPA tells you. So if you were thinking, yeah, I'm going to get long, fine, get long, but once those signals start to come up, it doesn't look like it's going to go very far, and then you have another down day. And look at the extent of the down day candles. I mean, they are, you know, they're pretty deep. Whether this is a complete reversal or it's just another of those corrections, we will have to wait and see. We've got earnings, we've got the Fed we've got the FOMC, not next week, but the week after, which is why you don't have any Fed members on the airways at the moment. Just have a quick look at the Dow. That's up as well, and the VIX is over at 22. Right, so that's the kind of mood of the market at the moment, and we know sentiment is, you know, trying to be positive because the Aussie dollar is also being bought. But let me just go back to what I've been looking at in terms of sectors. So we know the energy sector did very well. So we want to know basically, is there still an opportunity to trade by stocks that form part of the sector? And of course, then you have to go and look, well, you know, where do you find the stocks? And what I've actually done is basically I have used, on this occasion, I've used Yahoo. So if you want to take this URL, as you can see here, you've got finance.yahoo.com/quote. Then you put in the sector that you want to examine, and I've got XLE, which is the ETF for the energy sector, and I've got holdings, and that actually brings it brought up the top 10, which is fine. Now you have to also understand there are subsectors and etc. And sectors like indices are weighted, so in the sense that some companies in there have a more of a presence. They have a bigger share, if you like. I'm not sure on the XLE whether it's on market cap, whether it's price. I haven't had time to go and have a look. It's important to know about weightings because it has all sorts of implications. There are advantages and disadvantages. This is something those of you who know may know already. David and I, we've spent most of Christmas and we're working frantically at the moment on putting together a really comprehensive stock trading program. And a lot of what we say in these sessions, they're going to be topics that are covered in this program. And you know, it's like when you start and you think of something, oh, I know that, and you go and have a look at it and you think, oh, gracious, yeah, that's really important. And much of, you know, what we will be covering in the coming weeks are topics that are covered in much more detail in the program that we are putting together. We'll also be putting up a link on my site and I think on YouTube, that if you want details of when the program is about to be released, then we will keep you updated. Anyway, so these are just the top. I just went for the top 10. And we can see here we've got Exxon, we've got Chevron, and I had a quick look at. In fact, I had a quick look at where was it? Let's have a look. And in fact, I looked at Marathon here as well. But look at the weightings, because what you're looking at is, you say we know what the performance the sector put in, and then we look at the weightings in that sector. And you can see here, Exxon takes it's a pretty big chunk. And you would think, well, Exxon, must have done really well. Well, it has. We'll go and see, and we'll have a look at Marathon. But what you spot is you can spot anomalies. You can spot companies which don't have they kind of really outperform the sector. And as both a trader and investor, that's what you want to look. There's not a lot of difference in the difference between being an investor and a trader is the length of time you're going to hold anything. That's really what it boils down to. As an investor, you tend to fall in love with your assets. As a trader, you don't care. You either want it to go up or you want it to go down. But trying to spot something or get hold of a stock that is going to give you the best return, there's a lot of similarities when you look for in as an investing stock and a trading stock. So in my analysis of what was going on in the sector to do with these stocks, this is where I use Market Beat, because it's a great site and it gives me all the fundamentals. FinViz does as well, but I get the chart, and I just like the way that the information is presented, and it's also free. So that's great. So this is XLE, as we can see here, and it really took off in November 2020. This is the pandemic. This is the big crash that we had there, and it kind of recovered. And when I said about candle configurations, the one configuration, and we will do a session just on this, on two two candle reversals, where you have two candles, because putting together, overlaying one candle on another is very easy for us to understand. You know, 3 or 4, it gets a little bit more difficult, but a 2-bar reversal with two candles and then seeing what happens with the subsequent candles kind of confirms whether that is a valid signal or not. So you see this 2-bar, you see this nice up candle here, not really, not a lot of volume under that, because when you compare it to that, then you have the bearish engulfing, creates a shooting star, basically, a lot of volume, and it goes down. And now in the either the congestion or the reversal lower, your focus needs to be on the up candles to tell you whether in fact on the down candles, well, both actually, down and up, because the down candles will tell you whether this is going to carry on lower, and the up candles whether in fact this is just, maybe this is a false signal, as it were, which we get false signals all the time. But essentially what we had a reversal. You can see the volume that came in after the major fall. We got this reversal and we went back down to test the same area that we had from the first fall. And what we ended up with a double bottom. A double bottom is a great pattern, and off it went. And we can see here that was from kind of November onwards. So the XLE started to move higher, even though if we recall back at Novell in 2020, the energy actually overall ended up, it was at the bottom. But if you looked at that chart and you looked at, you know, what the sector had done in that period, and looking at the double bottom, that of itself, because we were this is a good time of year to look back to what's happened the back end of last year, perhaps to give us a clue as to what is going to happen next year. And 2020 was certainly the year for XLE to shine, as it were. Moving to NinjaTrader, where I've actually got the XLE over here. Let's move this away. Sorry, David, did I stop and then carry on afterwards? So what have you? Where I've got it on my NinjaTrader platform, I can see it's actually come off a little bit, and it's come off because the support and resistance, it's at a very, very key point on our Camarilla pivot point that we have here, which is the R3. So seeing this kind of pullback at the moment is of no great surprise. Going back to looking at the individual stocks, the stock that I actually looked at, I looked at Chevron, I looked at Exxon, but the stock that really caught my eye, which only had a 3.5% weighting in the index, was Williams Brothers. And again, there are some, I'm using the weekly chart here because it just has these wonderful VPA lessons. And once again, we go back to this big crash that we had back in March 2020, and what do we see? We have the dramatic fall lower. We have a really, really nice 2-bar reversal, a ton of volume coming in, and we have this candle here on that week. We've got a kind of a doji candle, reasonable amount of volume, but dojis are indecision, and then we start to climb higher. But what's interesting is as we climb higher, the volume actually begins to fall until we have this candle, which is quite a big candle. What is that telling us? It's telling us that it is a big candle, but maybe the fall is not going to be very deep. It's, you know, it's not, it is a reversal, but it's not a deep reversal from this primary. I mean, we had a V-shaped reversal here, and then it went sideways, but essentially we have had a trend higher, and we've had a trend higher from the 10, where is it here? $8. I mean, this is a stock that at one point was, let's have a look. Yes, we're talking $60 stock here. A nice, you know, double top up here, down it goes. And here we are. This is April 2020 on the monthly chart. Another 2-bar reversal. I can't, you know, once you start looking for things, you see them all over the place. They don't always play out. If they're going to play out, it's what happens with the next 3 to 4 candles. But all I'm saying at the moment, this stock is in a really, really nice trend, but it is coming to a, you know, some significant resistance. And this is where we go back to, let's have a look, WMB. Because we need to know where we think this stock is going to go. And in fact, it's already at a significant, certainly a significant resistance on the daily chart. But, you know, is it just going to be a pullback? We have to see the what the volume comes up at the end of today. And then we look at the weekly chart. We are reaching these significant levels that we saw on the other chart. And let's have a look at the monthly as well. But it's just the most significant thing about the monthly chart is that the stock is now at the volume point of control. This is volume and price over time. It needs to get off this level, off the VPOC. If it does, then, and it gets through this resistance here, then it really does have a chance to motor higher. Much of it will depend on what the energy sector as a whole is doing. It does only have a very small percentage in the energy sector, but it's just discovering a little, I think a little gem, given the cost of the stock when it was down at $10, and we have a classic, you know, what have we got here? Fantastic kind of, you know, hammer-like candle. It is on volatility, so we know it was likely to reverse, and it did reverse into the spread of the candle. Lots of volume underneath it. Look at that. It tested that sort of low that it was over here back in 2016. These are the sorts of signals that you need to look for in all time frames, but it's trying to define something that, you know, is as I said, this is $10, and if you want to see how you know, how strong this company is in terms of its fundamentals, you can look at the profile, and I think you'll be, you know, quite shocked. It does, you know, it's got annual sales of 7.72 billion. I mean, it seems to be a cash-rich company. It's got all the right sort of metrics from a fundamental perspective, and yet, you know, had you looked at it via the sort of, you know, looked at it via the sectors and looked at charts and, you know, compared the chart, its individual charts against its sector, it was certainly a stock that was already outperforming the sector, even when the sector wasn't doing very well. And when the sector then started to do well, it actually pushed the stock higher. Right, I'm going to stop there. Sorry, it's just slightly over. Is that okay? Any questions? No? You've answered it. So I'm actually going to stop there because, as I said, this is in 2 parts, as it were, to help us with the recording. So we will be back in 5 minutes. Is that okay, David? Pardon?